Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us, broadcasting to you live from the Dallas KFXR 1190 AM iHeart Radio and Media Studios and worldwide through yorbamedia.com. All right, I have Don Wood, Chief Executive Officer and President of Federal Realty Investment Trust. Symbol is FRT. And Don, welcome to the show. Thank you for being here.
Good morning, Michael. Thanks for giving me the opportunity today.
My pleasure. Your company that you've been in with here since 1998 is standing alone in this field because of many reasons. But before we get into your company, I'd like to see if we can back up a little bit. You've got a depth of experience just in this industry sector. Let's hear a little bit about you and who you are, where you come from, and then please, if we could, we'll get into Federal Realty Investment Trust.
Sure. Well, I started my career at Arthur Andersen, and that was back in the day when that was a good thing. But Arthur Andersen, I was there from 82 to 88. I left there to go to work for Donald Trump back in the late 80s. And from there over to ITT Corporation. And ITT, I had a bunch of different jobs, including the CFO of Caesars. But in the 90s, when Starwood came after ITT, or Hilton did rather, but Starwood wound up with them, I was recruited to this thing called a Real Estate Investment Trust, a REIT, that was down in just outside of Washington, D.C., to be its CFO. And I looked around and I said, that sounds fantastic, but what in the world is a REIT? And it really was my first experience in understanding that real estate investment trusts are normal companies, just like any other company, except for a provision in the tax law that requires virtually all of its earnings to be distributed to shareholders in the form of a dividend. So if you did it right, you could always count on a steady stream of cash flows as a shareholder, and that's one of the best things about owning a share in Federal. Nobody has been able to increase its shares to its dividends, or its dividends to its shareholders, rather, for over 47 years in a row. That's since 1967. So it's been a great place to have landed in the late 90s, and lots going on in commercial real estate, particularly shopping centers, which is what we do since that time.
All right, now if we could, that gives us a good feeling for you, your background, your leadership skills, where they started, which you've mentioned some tremendous mentorship. I'm sure you picked up along the way. If we could, let's talk a little bit on this segment about the business model, core portfolio, tactical redevelopment, things of that nature.
Sure. Well, let me tell you that. Federal Realty does most of its business on the coast, and that's Boston, Massachusetts, down to Washington, D.C., Northern California, Southern California, a little bit in Florida. But our entire business model is all fashioned around increasing this stream of cash flows to its shareholders each and every year. And that's not easy to do. If you think about that, and we're your company, and you said, how do I get that done? You've got to start with the best real estate. And for us, we are a shopping center company, a retail-based company. We do all kinds of retail property other than malls. Malls is kind of a different business. But when you think of some of the great outdoor shopping centers in the country, Santana Row in San Jose, California, for example, or Bethesda Row just outside of Washington, D.C., in Bethesda, Maryland, you'll often find that they're federal properties. So we're all about operating the best, building. We also have a great development pipeline that I'll get into in a little bit, and buying, but only buying those properties that we can figure out how to make an awful lot better over the years. And as I say, if you think about this for a second, if you're an owner of Federal today, if you bought those shares today, you would be getting a dividend of about 3%. About $3.48 a share annually, divided by whatever your purchase price is. And to be able to have counted on that going up every year since 1967 is really, frankly, it's just something I have to stop and pause on for a minute, because think about the world since 1967. Think about 20% interest rates. Everybody's worried about rising interest today, but think about 20% interest rates back in the 1970s. The Gulf Wars, the different economic conditions and crises over that period of time. Each and every year, the cash flows from these shopping centers and others that we're building and buying continued to increase. It's really remarkable, and I remember even coming in to the company saying, how do they do it? Well, now I know. It really starts with great real estate. That's pretty recession-proof.
Now, you've left a couple of things out there that I just wanted to draw points to. It also has to do with management's ability to see where things are going and their ability to use timing in their purchases, their trading, and things of that nature. You mentioned that you've got a core portfolio that is diversified on both coasts. Well, I'd like to drill down into a little bit of what is some of the secret sauce here that allows you to because I'm looking at your stock. It went from $40 to $118 here since 2009 to where it is. That's phenomenal growth. That leads me to believe that you have some secret sauce, something unique about leadership skills and your ability to time your purchases and manage your business that's puts you ahead of the field. Can we delve into that for a sec?
Yeah, Michael, I love the point, and you said it a couple of times about timing. And the one thing about real estate that really any investor in real estate needs to think through is, what is your time horizon? Are you buying something in order to take advantage of the timing in the marketplace and flip it quickly? Are you holding it for the long term? How long are you thinking about with respect to timing? And our philosophy has always been, you don't know what the future is going to hold. Today, when you think about online shopping, when you think about changing consumer trends, you don't know what the future is going to hold. So you better, when you're either buying or building or investing or operating, you had better think, in my view, about the long term. And that thought process has permeated our organization for a long time. And as a result, we're not trying to time. Now, certainly after a big recessionary period like 2008, we wanted to be in the market more. This is when we really did all of our planning for the building and construction that we're doing today, which turned out to be a very, very good decision. But still, the primary part of the business plan is slow and steady and focused. So our balance sheet, for example, which really might be the real secret sauce here, is very low leverage. And normally when you think about investing in real estate, you think about using a lot of debt and using a little leverage to increase your equity returns. But we don't do that. We've gone the opposite way. Our debt to total market capitalization is only 22% today. So that means over 78% of the value of our properties is held in equity. Doesn't have to be paid back when times turn tough. And that cushion allows us to plan for redevelopment, reinvestment in those properties for throughout whatever cycle is going to be, and that is critical. The second thing, and I am going to take a little bit of credit here, I think that the team that has been put together at Federal is really good. We've also been together a long time. We've been together in large measure since the late 90s. And so there's not a lot of wasted time in terms of, well, should we look at this or should we look at that? We know our business plan. We know what's worked. We know what hasn't worked. And it really does lend us to, I think, given where the properties are, outperformance on a regular basis. And if you look back over not just 5 years, but you look back over 10 years or 15 years, I think you'll see that outperformance more years than not, by far.
Yep, I'm inclined to agree with you. Some of the market timers that have been on the show said we potentially have another full 50-year bull market in real estate, but that's for another conversation. Let's go to a break now, Don, and then on the other side of the break, when we come back, let's talk about the 2013, 2014 milestones, accomplishments, and the future for FRT. All right?
Looking forward to it.
All right, we'll be right back on the other side of this break with Don Wood, Chief Executive Officer and President, Federal Realty Investment Trust, symbol, ladies and gentlemen, FRT. Special thanks to 1-800-PublicRelations.com for all their PR and media support.